This is another trade recap. I'm gonna go over it really quickly. Let's get to it. Another recap I took the other day, not too long ago, but you guys probably remember the day of February 9th. And I'm gonna tell you how I got over it, and tell me in the comments below how you guys took this trade, or what was your bias coming towards this day of February 9th. Get to it. I'm gonna go over it. My TP was at these Asia highs, finite Asia highs, and my final TP was right around the relatively like equal highs, but a good high point up into Asia. And my SL was at the S candle that made the fair value gap, which that I entered off of. Typical SL, and coincidentally the SL is actually right at this other fair value gap as well. So it's like up in trade entry right here at 10:30. I set a buy limit of, I believe it was like I believe it was 2 contracts up into this imbalance right here. After taking out buy side liquidity up into these London highs, price tends to do is usually go towards discount into a balance up. I think MES was kind of more aggressive with it, going even lower than going high to still display that sort of price action going into the FEG. So my entry. Then what price did after that, it was a really, I'm pretty sure it was a good entry. Pretty good entry, because as soon as price tapped here, it just went to this FEG a little bit and then come back, and then there was just a parabolic bullish move towards the upside, taking out my TP1 and my final TP. And as today limits sell order on 1 contract, partial close. Plus after that, I put the sell at break even, and it still went up to my area of my terminus. And coming into market open, I already knew that this was bearish, and I'm gonna tell you why. Simply because if we look on the higher time frame, obviously at the higher time frame, so because the last day of the week of the price action, we saw that overnight we went down, then we passed this breaking previous day structure, and so that we could go and take out these highs later on in the near future. I had that all in mind. Not only that, to pre-market we were already bearish. There was just, if we look at the 1 hour time frame, we did a market structure shift, and price went imbalance, broke structure shift, kept going up. 15-minute we were recovering from this dip, and and a new change of direction was heading towards buy side liquidity. So this could be a signal to go up. Coming into the days, what I've noticed is that we broke previous day highs, went up into Asia. What I saw is that we broke previous day highs, and during Asia we run up into these, we run up high, and then we accumulate down here lower, taking out Asia lows. And then during London kill zone hours, price action went up a bit, and then taking out these lows, and coincidentally to see this new week opening gap was reacted to, and we tapped into the weekly opening gap. Price obviously reacted to that, and then came down lower to this fair value gap from my last trade. And so we reacted off that imbalance going here, and so these highs that we made, these are important highs. They haven't been, we took out, as these highs were getting made, we were taking out sell side liquidity going down into this imbalance, possibly because, see, we're in discount, bitches. Now, after coming to this fair value, after coming down to this imbalance, price was at a fair value to not only to take out buy stops at a discount in a fair value, but not only that, but it's also convenient. Market open, this candle right here coming into market open, we pushed down and taking out this bunch of price dumped, of course, and we manipulated a bunch of people. We manipulated 2 different types of retail traders. One's thinking that we were going to go up. We probably grabbed the money, activated a bunch of stop losses. Not only that, the people that saw this parabolic move downwards panicked and decided to sell, only to be John Wicked and lose their money. Because if you don't know, in NASDAQ 9:30 opening, since NASDAQ is literally one of the most traded, most liquidated asset in the world, there's obviously money to be made in these markets over here. After grabbing that money, the money has to go somewhere to offset these buy side liquidity. It can be traded and sold off into a higher price. Hence why we came down here in the first place to that equilibrium, that discount I talked about earlier, at a fair value going up. You know what I mean? And maybe they were either more greedy or didn't have enough money, and then I guess the algos wanted to I guess do a little Judas swing and then go up. So coming into the kill zone, as we took out as these highs, price was going further and further up, taking out buy side liquidity, and around at this again. It's a fractal. This discount, we took the trade off the limit because the context was within my knowledge. I know that we were able to write off this price action going up. So pretty good trade. Did about $477.06. Had to cancel a bunch of trades just because there was volatility and shit. So this action prior to the kill zone really did set up the context just right for the perfect ICT silver bullet model to play off. So, and we did take out these highs. Pretty good trade. Let me know what you guys did want during these trades. Let me know in the comment section, and I'll see y'all later. Peace out. More videos will be uploaded soon.